Good morning, everybody. Thanks for coming out to the Metals Investor Forum. I am John Kaiser. I am kicking off this session. The topic is discovery exploration boom. I think we're in the second year of what will be a 4 to 5 year discovery-oriented bull market, similar to what we experienced in 1992 to 97. So where are we with the four narratives? Well, we had a sort of Trump infrastructure rally, but it is fizzling now. The Chinese have stopped cranking up their various metal markets. Iron has pulled back. Copper, everything stalled. Unfortunately, the hopes that Trump might get a $1 trillion infrastructure spending binge going is diminishing. He needed to replace and repeal Obamacare, and he could only do that with the cooperation of the Freedom Caucus, which is the old Tea Party, which is against any sort of fiscal stimulus. They're more into the austerity stuff. So the commodity cycle is in a bit of a stalled position right now. The gold bug narrative, you know, I saw gold back at 1225 yesterday. There has not been any really crazy geopolitical chaos to disturb the world, to drive it higher. And again, with the Freedom Caucus asserting its sort of kingmaker role in the House, we're definitely not going to see the inflation narrative come back to life. With austerity and negative things for the world looking forward, there isn't any special reason for gold to go to $3,000 or anything like that. Now, I've been pretty keen on the security of supply narrative. I think you need to look at metals in terms of their specific supply and demand, disruption of supply, new demand coming on stream, things like lithium, graphite, cobalt, all these metals. These are spaces which can function differently from, say, the malaise affecting the other metals. So that's a space still to look at carefully, but I think discovery exploration is where it's at now. And all these companies here in my session are discovery exploration. And I'm going to try and explain why this is where you should be focused going forward. The IMF just put out its latest projections for global economic growth. I'm not going to dwell on this too long. The idea that India can drive a new super cycle is not possible until 2025 and beyond. We still have this pattern of relative decline by the United States and relative increase in terms of global GDP share by China. But China's growth rate is diminishing. Also, they have their own credit bubble that they need to deal with. So the idea of seeing a massive increase of demand for commodities, such as we saw in the past decade, that's just not in the cards. So we'll see local volatility in commodity prices, but nothing spectacular such as kicked in 2003 until about 2011. Zinc is the one exception. Now, it made it almost to $1.30 a pound, and it has a natural depletion cycle that has not been replaced with a new supply. China has been, of course, a relentless supplier of new zinc, but China has an environmental awakening underway where it needs to curtail the pollution coming from its many smelters and refiners, all of whom use their rivers as a toilet, which are used to irrigate their farmlands, which has contaminated the food chain in China. So this is a slow motion problem that China is fixing. So I don't think Chinese zinc supply is going to grow. So there's a double whammy coming, the depletion of Western mines and declining Chinese supply, which is going to probably take zinc to $2 a pound. And if this situation in North Korea gets out of hand, there's plenty of zinc refiners, smelters in South Korea. If those all become non-operational, it doesn't really affect the supply and demand dynamics of zinc, but you get something like we had with molybdenum in the past decade, where you had roasting capacity shut down, and all of a sudden $3 moly was $35 moly. So you'll get the optics that Bay Street likes, you know, a soaring metal price, even though it has no long-term relationship with fundamentals, but there is a more modest fundamental uptrend for higher zinc prices in the works. And the company here to to pay attention to is Vendetta Mining. They've managed to get financed. They're ready to go with their Pigmont project. This is a feasibility demonstration and expansion, so check that one out, catch that talk later today. My own favorite pick in Zinc, they went to Bay Street and knocked on 60 doors and came back empty-handed, so they're going back into hibernation, wait for better optics so that Bay Street will understand that the InZinc is another Hermosa Taylor potential story. So the security supply narrative, the going assumption has been globalization. You know, whoever produces it the cheapest can deliver it to the highest bidder in the world. Trump's talk about protectionism, pulling the plug on globalization has started to subside as people explain to him that it's all interwoven, that when you make America first, you make everybody last. So with the danger that we will see this kind of protectionism go crazy and cause certain metals to have their supply disrupted, that has diminished for now. But given that the Twitter-in-chief has an addiction to making the world jump up and down, don't rule out that he still can't get something crazy done that really disturbs the balance of a global economy. Uranium's still in the doghouse. Fukushima is still hanging over Japan. However, Trump's isolationism and talk about you know, leaving NATO, letting them do their own stuff, Japan and South Korea, they're all starting to think, well, we might need to have our own nuclear weapons, and you need the nuclear energy industry to do that. So that's in the background, potentially turning around this fear that Japan's going to shutter its nuclear reactors permanently in the way that Germany has proposed, which I think they're starting to regret as they realize that they may be surrounded by authoritarian government in the West with France and authoritarian governments to the East with Putin and his buddies, and all of a sudden the American protection is being withdrawn, so they kind of got a bit of a problem to deal with. Cobalt's the hot new metal because it has potential major supply disruption from the Congo, and it has a demand driver from the electric car, the lithium-ion battery. Cobalt is a key input in that. So companies are starting to get into the cobalt story. Potash, the fertilizer industry, it seems like potash has settled down at $200 a ton. So all that enthusiasm has pretty much gone. The rare earths, they're still at prices where they were at the start of 2009. Again, if Trump causes a mess with China, that's a serious problem for rare earth supply to the rest of the world. Of course, they've all dealt with it by moving their operations to China, which could be a problem when they are required to move all their operations back to America so that the jobs can be there, but the rare earths may not come. So if you want to be a bottom fisher, look at the rare earth space. And moly, plenty of byproduct supply from the copper producers, so nothing really happening there. And tungsten's the other one, comes mainly from China. Small-scale tungsten projects, you should be looking out for them. Again, if Trump creates a train wreck with China, there may be none of this war material coming west to the United States to help build up its manufacturing industry. So if you are conservative, and you don't want to bet on higher metal prices, and you don't want to bet on a new discovery taking your cheap stock up to $2, $4 or so, my best recommendation to you is Scandium, in particular the company Scandium International, which I've been bothering you guys about for the past 3-4 years. Well, it's finally coming together. This morning they announced getting the mining lease. Now the question is $100 million financing, what has it done? I've modeled it at what sort of the upside is in 3 years based on a cash flow multiple system. And you can see that the range is anywhere from $1 to $2 to $2 to $3 based on their existing output plan. So this is one now where it's shifting over into the hands of another group, which is going to raise $100 million, likely bypass Bay Street. And this one will stand alone because in the long run, the price will actually come down. It's all about making scandium available to the latent demand that's out there. This mining lease is big for not just this company, but all the other little juniors which have scrabbled together scandium projects because now they know that if this takes off, if these guys are successful, global demand will be much larger than this one company can possibly supply. So your big boom, starting sometime next year, will be scandium to replace the lithium and cobalt story. And then also you can find a link on my website where I've done an expansion scenario which shows where this can also go to. Stocks had a hard time getting the attention from the Bay Street. Most people don't get the story. Even one individual I'm going to have drinks with later today was reminding me that he's a big skeptic on this whole thing. But these four people that you see up there, these people got the story. The first is Bill Lupien, who in 2010 told me, if you think rare earths are interesting, you should look at scandium. And he's the one that got that scandium project and the key person into Scandium International. They nearly lost the project. The next person, I can't yet tell you his name, but he retired from a $2 billion company of which he was CEO at the end of January. And these are the guys who own 20%, and they're either going to stay at 20% and write a $20 million check, or convert it into 50, 60 million shares of Scandium International and become the largest shareholder and basically responsible for the destiny. They are US-based. They've already indicated if they go this route, we're not going to even bother with Canada. The company's a full US filer. It'll end up listed in the US, and this thing's going to become a completely different story. And the third person is Andy Gregg, former head of Bechtel's Global Mining Unit, whose scout saw my presentation at PDAC a few years ago and said, this is incredible. I can buy 10% of this company for $2 million. Fantastic story. He's based in Brisbane, Australia. He also is the initial seed backer of the Share Collective, my project that has now started beta testing, which will enable the crowd to visualize the future of projects in a collaborative environment. And the fourth one is Chris Jennings, who also understood the implications of scandium and bought a royalty for $2 million. So these parties all kind of not from the mainstream. They all got it. They've put up stuff. This company's now in a position to become a big success. And I think of the 220 million, 50 million shares out there, probably 100 million shares are owned by my audience because nobody else has talked about this story. And Monday, a lot more people will talk about it. New South Wales get it. They have a conference. They're going to be talking about all kinds of stuff, thumping their chests about approving this permit. So when this goes into the mainstream, watch out. Now gold, this chart's always worth looking at because what it shows you is the green line, $400 gold in 1980, inflation adjusted to the present, 1,204. Well, gold's like up 4% above that. So you have to think of gold in terms of your average cost of production. And when gold went from 35 bucks to 400 and parked there, the mining industry harvested 3 billion new ounces, and the gold lovers had to eat all that gold and stash it away. And we're now at a point where there isn't an awful lot of gold that's easy to harvest like it was in 1980. So what this done is to the optionality trade is it said we need a higher real price. We don't need hyperinflation or fiat currency debasement because it's a wash in the numbers. Your worthless deposit stays worthless if gold's at 3,000 and now it costs you $9,990 to mine it. So part of the big shift I've seen is away from the optionality trade to all the ideological pumping about the socialists going to tear the world down. And of course in the United States they got a problem because the Republicans control all three branches of government, and sort of talking about the evil socialist Obama doesn't really stir up the troops to get excited and go buy gold in the gold optionality plays. So this is part of the reason we're seeing a shift to discovery exploration. By the way, frankly, I think gold's going to go higher. The gold narrative will come back because no Republican presidency has ever failed to increase the total debt by a greater amount than any predecessor administration. And I don't think Trump wants to be the first person to fail at that honor. Now, one of the things I've picked up is like even Bay Street is tired of the tyranny of the gold price trend. Last year's rally, when the juniors finally turned around after a 5-year bear market at the end of January, it tracked gold's run from 1050 to almost $1,400. And things finally started to feel good. Subscriptions started to come in July. And then in mid-August, it stopped dead and reversed, and everything stopped. The junior sector was still tracking the trend in the price of gold. And we had an awful last 4 or 5 months last year until probably the last couple of weeks of December. And then we've had a turnaround this year that sort of has stalled in mid-February. The PDAC curse has kind of kicked in, not as bad as it usually does. We definitely do not have an onwards and upwards that we did yesterday. We have a, sell in May, go away. But I think we have a dynamic in place where in the final quarter, this space will be rocking and rolling. Retail will be coming in. There'll be major new discovery stories on the table. And I'll tell you why. Take a look at this district, the Windfall District, the most horrible district in Eastern Canada, where you can have a deposit with 1.6 million ounces of 8-gram gold, and it still doesn't work at $1,200 gold. Yet in February alone, this district, which Osisko has consolidated, and a number of other companies have resumed work, and one of them, Bonterra, is here, and you should definitely hear their story. They raised $100 million. Osisko is doing 400,000 meters drilling. There is no barn burner discovery hole. There is no new resource estimate that knocks your socks off. It's a rethink of the potential of this system. And here you can see the numbers. Don't dwell on it here. You can catch it later. But the problem is these are all discontinuous little deposits that didn't hang together, very expensive to mine. You can get great numbers. It was kind of a lifestyle company where each year they would drill another, 2 meters of 3-ounce gold and reload the treasury and carry on for another year. But the team there has done a complete geological rethink. They say this is actually an overlooked 20 million ounce Timmins district and the entire urban Barrie Greenstone belt. It's not truly an area play yet because the market, the retail doesn't believe it, but you now are seeing Bay Street money coming into this vision that if you throw enough money at good geology, you will tease into the forefront, into visibility, fantastic resources that work with the metal prices we have. And March was a stunning month. In March, resource companies raised $739 million that are TSX Venture listed. So that was amazing. It has not done that since June of 2011. That is a significant turnaround. Who did it go to? Well, a fraction of the companies dominated. The first 3 are sort of optionality plays. They're still going to get a lot of the feasibility demonstration type of work. But the rest of them, Nighthawk's here. Nighthawk was here in November. They've raised $25 million for a discovery exploration play to Kolomak in the Northwest Territories. There's a bunch of lithium stuff in there, which is, you get these stupid financings at the end of a cycle. But a lot of the others are exploration, discovery-oriented companies. And there's, about 10% of the money went to companies in $1 to $5 million range. There's still a lot doing these small financings. We are nowhere near what you call a frenzy, a top in the market in terms of financing activity. These signs that we are seeing are the beginnings of a major discovery-oriented bull cycle where the goal is not to pray for higher metal prices. It's not to pray for a kill shot. And again, the really important thing that's changed is the investors now say, don't give me your perfect target and I'll give you $200,000 for one drill hole, and if you don't deliver 100 meters of 10-gram gold, you're dead. No, you're $5 million to build the geological context, to vector in on where the target is, to provide evidence that there's a footprint for a major prize, and then we'll give you more money to get the job done. Kind of what's sort of happening in the Windfall District. And the sector is still in pretty sad shape. Half of it have negative working capital. There's only about 400 or 500 companies that are viable, which makes the job easier for you. It's why these smaller scale conferences are good, because there's only 30 companies here. They're handpicked by the speakers. They have to have a decent story. So all the dilution that comes from the lifestyle guys with stories that make no sense, they're not there distracting you. This is a good time to be focused on juniors. And what are the elements of a good exploration story? Well, you need to make a case that there's a metal endowment in that area. You got to have a reason for that. Make a case. You got to say, here's something that's overlooked on our project. There's the prize that we're looking for. And of course, there's been a lot of exploration in the last 150 years. What are you doing differently that means you're going to deliver something big when all your predecessors, in most cases, have delivered nothing? And we are not yet in grassroots conceptual part of the cycle. That will take at least another year. We're still in the revisiting, rethinking old systems. Very popular are ones that have some sort of optionality deposit in place so that if Trump really does screw things up, we do get a substantially higher gold price. Well, even if you find nothing new, you got something of value. But we're seeing the system wander more into a higher risk discovery exploration, and that's where your talented technical teams, not jokers who can just write some two-page summary on something but can't make a case as to why they are chasing a big prize. This is the serious group, and the lifestyle guys are not going to be back. And here's an example. I tried to get this company to present here, and I've got this here to kind of, a lot of you people here are probably not 20-somethings. In fact, most of you, and you all probably remember SK Creek. And there's a little bit of unfinished business called the Lulu Zone, which was supposed to be SK Creek too, but as they drilled beyond the first intersection, there was just nothing around it, and they eventually gave up, and various groups beavered away at it in the past 25 years, and eventually they teased out an understanding as to why there was nothing there. And the story here is there's a thrust fault which literally detached the tip from an iceberg that could be another SK Creek 2. And this company ended up doing a farm-out deal with Silver Standard. It finally got signed last week, which is why they weren't willing to be at this show. And they'll be drilling $4 to $8 million worth of high-risk holes in the footwall, piecing together the stratigraphy under 400 to 600 meters of garbage rocks that were shoved over from the west. If you get another SK Creek type discovery up there in the Golden Triangle, well, that's the kind of thing that will reignite memories. And that's actually, of course, from the 89 to 92 period. We had bigger discoveries after that, but SK Creek was phenomenal. It would be worth 3.2 billion Canadian today. And don't try to read that. You can catch it on the video or at the presentation later. But I do these outcome visualizations. I put together the numbers. And the thing I want you to look at is this ladder here. This is the rational speculation model. This is how you price discovery exploration plays. And here's what it looks like in a graphical form. That yellow thing is what you want to see. It's the S-curve. The blue thing is rational behavior by the market. When you get a discovery where nobody can say what the limits of the size is and what the grade will be, the market behaves irrationally. And we saw that with the beginnings of Camino's project, which is going to come up here in a second. And here's what it looks like when you have 100% of the project. This stock could go to $26 if it had 100%. The problem with the prospect generator model is you end up with 15, 20, 25%. It's under the control of somebody else. You send a signal that it wasn't worth drilling yourself and raising money from anybody. And you're lucky if one of the 10 farmed out projects you have actually delivers. The market now wants 100% owned projects, and the majors get it. They are outsourcing exploration. They're no longer struggling to farm in. They're taking 19.9% equity stakes in companies which have district scale projects with competent teams that have put together a vision as to why they could come up with something sizable. They don't want to buy 0.6 gram deposits and wait for the price of gold to go up. They want a toehold. They get rights to maintain 19.9% in future financing. And when the competition comes, they don't have to pay quite as much to own that project. And so coming up here are the 6 companies. 2 of them aren't in my group, but Atomera is here. That is definitely one. You should catch the presentation. Last year, after I saw the presentation here, I sat down with Mark and turned it back into a bottom fish buy recommendations, and it's doubled since then. Playfair hasn't yet gone up. I have not yet recommended it, but I'm very intrigued by their Irish gold play. You get a high-grade Irish discovery going, and you got something. And the 4 coming up now are Camino Minerals, which has just made a copper discovery, and you can see that spike in there. The stock ran to 223, where it had a $110 million valuation, which was like insane. That was S-curve. It's pulled back to 110, and they've just raised $5 million so that they can carry on. That was a little 35-cent bottom fish at the start of this year. It was a 10-center a year and a half ago. Then there's Rainy Mountain Minerals, which is going to produce another Borden for us, maybe something better in Ontario. And then we have Mineral Mountain, consolidate an old district where millions of dollars have been spent to fail to find another homestake. And now they believe they are doing it right, and they're gearing up to deliver at least a son of homestake, if not maybe the father of homestake. And then finally, Alto Ventures is kind of an interesting hybrid, because their main flagship is Oxford Lake, one of the least explored greenstone belts in Canada. And that's sort of early stage, almost ahead of the curve. But they have the benefit of an optionality play, the Destiny deposit, that can be rethought as a high-grade system, possibly another windfall type system. So we'll see where they go with that. And so that wraps up my part of the presentation. The Share Collective, if you want to be a beta tester, get in touch. We have started, and I'll set you up. And again, Discovery Watch, follow me on Kaiser Research on Twitter. That is free. I do these weekly comments, about 20 minutes, and they're kind of fun to listen to. I make it easy so you can home in on the one that you want. Thank you very much.